Hello guys, today I will share with you my top 5 stocks for 2024. Bear in mind, this is the 5 best opportunities I can find in my research platform, and this is based on valuation and quality. So full disclosure, I do own all these 5 companies and this is not investment advice, this is just my opinion. So let's start. S&P 500 last week just hit a 52-week high, so at the moment it's a little bit more difficult to find good value on the S&P 500 in US companies. When you look into the last year during the December, it was way easier to find better value. Companies were trading at lower valuations, so it is a little bit difficult right now to find really good opportunities. So this is my top 5. This is 5 stocks I do believe they are trading at a fair valuation or really undervalued right now. So let's start in. First stock, Google. For me, Google is a company I really like. This is a really high quality, a really good business, a really superior business model, and with a wide moat. So this is a company that is still growing a lot. They have really good margins. They have plenty of cash in hand and basically no debt. Their net debt are negative. They could pay all their long-term debt with their cash in hand, and still they have $106 billion left. So a really good balance sheet, a really strong company. Their returns on invested capital have been really high. Return on invested capital last year was 22%, but 5-year average is around 28%, which is really high. They have plenty of competitive advantage. They have a wide moat, so when you want to search, you Google it. So this is the biggest moat you can find out there. They have been free cash flow positive. They are returning capital to the shareholders, doing a lot of buybacks. Right now, the average is around minus 2.9%, 2.7%. They are buying back that percentage each year. This is a really high quality, one of the best companies out there, trading at a forward P around 20, but for a company with this quality, this is really low. In my evaluation, I have a fair value around $150. Right now it's trading around $135. So for me, this is a must buy. It's one of the biggest positions in my portfolio. At $120, it is a really good buy. Under $100, which was the value it was traded last year, it was an exceptional buy, and I basically built my position on Google around that. I increased my position after these latest earnings because their latest earnings were really good and the stock was down a lot. It hit around $120, and I increased a little bit. But for me, it is a stock that is still at the buy range. It is a buy for me right now. So this is my fifth stock. So the fourth one is T. Rowe Price. For me, it is a must stock as well. Finances has been doing really bad last year because of what happened during this last year, the SVB collapse, for example. So investors did stay away from finances, but this is a high quality company trading at a forward P around 14. They have really good margins. They have no long-term debt. They have $2.5 billion in cash. Their returns have been really good, even though their return on invested capital last year was around 16%, but their 5-year average is around 27%, which is really high. It's all check marks. For me, they have a really good competitive advantage. Investors like to use their money and invest in their company. They used to trade above $200, and now it is a company that is trading under $100, and it hit a low under $90, I do believe, and I took that opportunity. And right now it's still at a really good price. For me, their intrinsic value is around 120. Bear in mind, this company is having difficulties because the economy and the stock market, it's not at its highest, and investors are not investing a lot. So when the economy starts to at full throttle, investors will come to the market again and they will invest using the T. Rowe Price platform, and T. Rowe Price will increase their profits, for example, because they make money with fees that their clients are doing as the client do their investments. So at the moment it's not the best time, but it is at this time that you should buy this company. So for me it's a must. Company trading at trading under, this is undervalued right now, and it is one of the best companies out there, and I do really like this company. So the third stock is JD.com. I'm not talking a lot about this company because I made a special video talking about that. I talk about the situation that their market cap is around their cash in that it's the same of the amount of they have in cash in hand. For example, they have 30 almost 34 billion dollars in cash, and they are trading at around 36 billion dollars. If you have the opportunity to buy one really good business that is profitable and make a lot of money for the same amount that they have in cash in hand, and you buy you basically are buying this business for $2 billion, and they still have their cash in hand. The returns are not the best. This is not the best quality company right there. It is a really good business, but their margins are not high. They don't have the biggest moat because they are facing a lot of competition from Alibaba, Pinduoduo, for example, and these two companies have better business model. But this is still a really good company in an economy that are growing, and for me this is probably one of the most undervalued companies out there. So that's why I like this company, and if you want to know more about JD, you should watch our previous videos. So number 2, MPW. MPW is a REIT that specializes in real estate for healthcare facilities. It's not one of the best business, but this is a company that was trading around $25 and now are trading under 5. So REITs are having a lot of difficulties with increasing rates, but with the US achieving the peak rates, it's not expecting that to go up more, but in the future rates will start to decrease, and REITs will benefit from that. So this is a company, in my opinion, their intrinsic value is around $9. They are trading like around 50 cents on the dollar. They increased their dividend and the stock plummet, but they increased their dividend to around half of what it was, because they want to pay more of their debt. And for me, it is a really good option. And still, with their dividend going to half of what it was, they still have a dividend yield around 12%, I do believe. So for me, it's one of the best opportunities in REITs. They are having difficulties, and with higher rates, their value are coming down. But with this turning point on rates, I do believe their rates on the US will not go up anymore, so they will start to decrease, and they are not going to 1% or 0% like it was in the 2020 year, but they will decrease to a more stable place. So, and with that decrease in rates, I do believe REITs will be one of the beneficiaries from that. And bear in mind, this stock is down almost 6% year to date. For last, my top one, it's Alibaba. Yes, for me, Alibaba has never been cheap as it is right now. It like $60 around that last year, but I do believe right now at $70 it's even cheaper, because Alibaba is in a better position. They are being profitable again. They are resuming their growth again. They are growing double digits, their sales. Their margins are recovered. Their return on invested capital are stabilizing. This is a high quality company right now. For me, they are growing a lot, and China will continue to grow. Alibaba will continue to print money. They are trading at a forward P around 7.6, which is absurd. They have plenty of cash in hand. Basically, half of their market cap is cash. They have some long-term debt, but they could pay it easily with the cash in hand they have. But yeah, this is a company that is improving their fundamentals right now. They have good returns on invested capital right now, a really strong balance sheet, and I do believe the best thing they could do right now is buying back their shares, and they are doing. Bear in mind, in 2023 they bought 3.1% of the shares. Right now, this year they already bought almost 2%, and if they continue to do that, they should use. Their CEO said last earnings report that they will use their cash to improve, to invest in the company, which I do really like, and I want a company like Alibaba to invest in themselves and in their technology. And cloud can be a huge boom with artificial intelligence, for example. But they still have a lot. They have plenty of cash. They are starting. They will buy a special dividend. They will pay a special dividend now in December, and with they still have plenty of cash, and I hope they could continue to buy back their shares so we can create more value for the shareholders. And in terms of valuations, nothing to add. I'm trying to be really conservative. I have one of the lowest intrinsic values that you can find out there. For me, a really good buy. I'm interested in buying Alibaba under $120, but other investors think Alibaba words is around $150, $200, even $300. So everyone thinks Alibaba is undervalued, and for me it is really one of the best companies out there in a growing economy and trading at a really cheap valuation. So for me, it's already my biggest position. I want to increase this position as well. If the Baba continues to trade lower, I will increase my position. So this is for me. In now the bear in mind, in our research platform, I look into almost 100 stocks, and I evaluate them in terms of quality in our money journey checklist. I want the best quality companies out there, and in terms of valuation, I always try to be conservative, and these 5 stocks right now is the best opportunities I believe that are in the market. So this is what it is. It is difficult right now to find good opportunities. Last year was way easier. There were a lot of companies trading at a really good valuation. This year has been really good for stocks, and I do believe next year it's gonna be difficult to beat this year, but I do believe we can continue to grow, and the prospects for next years are good. We achieved peak rates, and next year I hope we can make money in this stock. So this is my top 5 opportunities I can find right now. This is really high quality companies trading at a really good valuation. Others are not high quality but are trading really cheap. But this is the best companies I can find right now for you to invest. So this is just my opinion, guys. I hope you find this video useful. So please like and subscribe.